Welcome back to Midcap Radar. The headline indices continue to remain under pressure, but the stock in focus is India Pesticides. The stock and the company reported a muted set of Q3 numbers. Both revenue and profitability slipped on a year-on-year basis, while EBITDA margins managed to expand. We have the CEO of India Pesticides, Mr. Dheeraj Kumar Jain, joining us now. Good afternoon, sir. Thank you so much for joining us here. Like the rest of your peers said, you too saw a bit of a muted Q3. How does Q4 look like, and is the worst over, especially in terms of both inventory as well as pricing?
Good afternoon, Vivek ji. Thank you for giving us time on this channel. And as you know, that agrochemical industry, everybody is going through a very tough phase, and we are also part of it. But still, with all these, we are able to manage slightly better than others. And we feel that probably in the next quarters, they would be certainly better.
Okay, all right. So when you say better, you are saying that the sector, or at least the products that you function in, have bottomed out. And what is the margin trajectory going forward? And what will lead to the growth that you're talking about? Will it be pricing-led or will it be volume-led?
Madam, margins, what we have slightly improved over the last quarter. And we feel that we should be able to maintain these margins around 20 to 24% over next year. With the products in which we are operating, they are slightly niche in nature, and we are able to maintain the price levels in the market. Though there has been a very severe pressure from Chinese suppliers.
Okay. See, in the quarter gone by, you've gone ahead and entered into a 3-year contract with a Japanese conglomerate. If you could name the company, that'll be great. So, what are the nature of this particular contract? When do the revenues start kicking in? And what kind of margins will you make on this particular contract?
We have entered into a 3-year contract for an intermediate. It is a pharma intermediate. We are working with a big Japanese multinational company, and I cannot reveal the name right now. But it is a very big conglomerate. They have been operating in India, and we expect a reasonably very good margin in these products. And the revenues are going to be, though this is a small product now, but the future looks very good. Once we join the hands with this company, the future looks good. We will be getting a lot of other products from them.
Is it Sumitomo Chemicals?
No, madam, no.
Okay. So when you're talking about good margins, is it the same profile as the current products? Will it be around 20 to 22%, or will it be margin dilutive in any way?
No. With this product, what we entered into the agreement with our Japanese company, the margins will be slightly better than this. The margin, because it is a very niche product, and the margins would be much better than these.
Okay. So if you could talk to us about CAPEX. You have CAPEX planned as far as the Sandila as well as the Amorapur plant. 110 crore of CAPEX is what you've guided for. So what is the current status of how much you spent, and when do these capacities come on stream?
Yeah, we have spent almost about 55 crores at our Sandila unit, and about 35 crores in our Hamirpur subsidiary. And in the coming years also, we have the same plans. Our CAPEX plans are quite intact. We would be doing a CAPEX of about 100 to 110 crores for next 3 to 4 years.
Okay, so 100 to 110 crores in the next 3 to 4 years. How would you be funding that? What is the balance sheet looking like for you right now? Will you have to take more debt for this? Will you look at any sort of fundraise?
No, madam, we are a debt-free company, and we would like to remain so. And we would be funding all these expansions through our internal accruals. Our cash books are reasonably good. We have cash and cash equivalent of about 150 crore presently in our books.
And what is the asset turn on this investment that you're making, or the CAPEX in these two plants?
Asset turn would be around 2.5, madam.
And it will be realized by when?
It will be realized in stages, because we are building the plant in block-wise fashion. So first block we would be commissioning in March this year now, and then we will be commissioning each block every 6 months. So it will be contributing to our overall revenue from next year onwards.
Okay, sir. So what is, out of your total revenues, what is the percentage that exports contributes out to? What is the kind of outlook that you're seeing, especially, in the international segments? What is the plan with respect to expansion, that you had earlier guided for both in Brazil and Mexico? And how's the margin profile shape up versus, the domestic business?
Sir, our export profile has already normally has been around 50 to 55%. This quarter it was slightly less because of the headwinds in the international market, but we wish to maintain around 50% of export and 50% domestic sales. And we are working on some registrations in Mexico as well as in Brazil. So that will take some time. Mexico, it has already fructified, but Brazil, it will take some time because they take very long period for registrations.
Yes, so Brazil has been one of the markets where registration and the costs continue to remain a little high. Last question before we let you go, Mr. Jain, if you can give us a sense of what the molecules are in the pipeline right now. There are a lot of molecules going off patent as well. What is the market size of that opportunity for a company like India Pesticides?
We are working, madam, on 3 to 4 major products from the molecules which are going off patent. And we expect a revenue of about 300 to 400 crores when they get fully operational.
Okay, all right. Thank you, Mr. Jain, for joining us today. So that is India Pesticides. The stock seems to like what Mr. Jain is saying. It is at the day's high, has recovered sharply from the lows as well. Well, it's now time